And we are live from Dubai. This is Claudia here with our founder and CEO of Utopian Global, Bill Wow, on the call. Bill, hello and welcome to our Tuesday afternoon call here from Dubai. And it's always a great pleasure to have you on the call. I know we have lots of people from different places logging in and watching and reviewing afterwards, of course, as well, this video, wanting to understand more about assets, about gold, silver, about, of course, income producing assets, about how to build and grow generational wealth, and of course, how to have cash flow. So those are some of the things we're going to talk about today. And I know, building cash flow, having income, or reoccurring income for you is always one of the biggest things you talk about, that we all need to be having diversification and this income coming in. This is what everybody is looking for. Welcome to the call. And the floor is yours.
Well, hello, Claudia. It's always great to be here on these calls, engaging the people from here in downtown Dubai. So welcome to everyone. Yes, well, what you're really speaking about is the concept of multiple streams of income, Claudia. And this is a concept I've known about now for many, many, many years. But traditionally, this is not what we're educated in, correct? I mean, certainly your part of the world, you were not educated to have multiple streams of income. You were born into communism initially. So the idea of financial freedom was not really a mindset that you had at that time. Your life has certainly changed since then. I myself was born in Melbourne, Australia, from a large family. We lived on a dairy farm, and my upbringing was have a good education, get a good job, and trade your time for money. One job, a single income, and you're only earning when you're working. If you're not working, you're not earning, which is a pretty crazy idea, isn't it? But it does create. It's a huge paradigm shift to think about that you can actually generate wealth while you're asleep. Just imagine what that would mean to you and your life, that at night you went to sleep and you woke, and during the night when you're sleeping, you had the ability to generate other sources of income. I mean, when I learned this concept back in the 80s and 90s, it was a game changer for me, because it was a complete paradigm shift, because I'd been brought up very clearly, go and get a good job and trade 1 hour of time or 10 hours a day of your time for a fixed income, which means you're capping your income. You're limiting yourself. You're limiting your financial freedom. So, yes, you're absolutely right, Claudia. Multiple streams of income and ownership of real assets is really important.
Yes, especially in now in this world we are living, of course, where we just, of course, recently saw the world literally got shut down in, so to speak, overnight, right? And what is also very, very important when you look at different opportunities, when you look at ways how to, of course, make more money online. We talk a lot about that. The partnerships, the people you get involved in, the different assets or the different investments you do into the different assets, and the time you spend into either researching it or working those are all key factors which are really, really important when you evaluate businesses. Now, you have been with, of course, this company, or the company owner, CEO, since many, many years. That is now since literally 2007 when it was formed, 2008 when we did launch. Now we launched, of course, or you launched with the concept about really putting precious metals in the hands of every man, woman, or on planet Earth, right? This was really the purpose. Why? Well, because gold meant, still means to preserve your labor, to really preserve the time that you trade against a currency. This is so key to understand. Now, it's actually pretty simple. Unfortunately, many people just don't get it. And that is why traditionally only rulers, royalty have always owned a part of their assets, part of their portfolio into precious metals. Now, precious metals or gold especially, probably, and you probably agree with that, at the moment, it's the most unsexy thing on earth to buy. Why do you think that is so? Why do you think that people just don't see any value or don't have any understanding, except of course here in the Middle East, there's a lot of people who have understanding, but in the Western world, why do you think that is?
Because we're dumbed down to believe that, Claudia. I mean, historically, the West has a long history of wanting us to believe in their paper currency, correct? They want us to believe in the fiat currency, which is backed by nothing in one sense. They want us to believe in the Swiss franc. They want us to believe in the US dollar. They want us to believe in the euro and all these other currencies, thousands of currencies that are out there, to have a form of value. And of course, the value that you only have is the belief that we give to it. But historically, that wasn't the case. In fact, the US dollar is the first reserve currency that's never been backed by anything since 1971. So that's why many people speak, many economics and professionals in this field speak about the demise of the US dollar, because the purchasing power is slipping through our fingers. So people don't know about gold and silver. It's a hard thing to sell because people, first of all, they don't see the relevance in today's world why you should actually own it. We're living in a very fast world, instant ownership, a digital world. So something that's digital that they cannot see or touch, that they can get hold of very quickly, they tend to have a more of attraction to that. Now, the question is about sustainability, whether it's a store of value and about sustainability. They're very two important questions to be able to respond to. Historically, for 5,000 years, as I said on last week's call, gold has always been accepted as a means of payment for commodities, whether it's food items, whether it's pork bellies, whether it's wheat, whether it's other commodities. Gold has always been accepted by global traders as a means of exchange. The question is, and there's thousands of years history to support that. The question is, as we move forward, in this particular decade, into 2030, 2040, 2050, will that be the case? Or will still commodities, products of the earth, which have real value, which are tangible, which take labor to extract it, which give it the value, will that still be the means of exchange? History shows us that anything to be sustainable has to have real value. Now, people argue that things that are not tangible today actually have value, and in theory they're probably right, but they don't have the history to prove that. So it's about risk management as well, isn't it? But I think to answer your question, Claudia, is that the hardcore people who have been around through economic cycles understand the purpose of gold and silver, no question about that. For the younger people coming up, they're brought up in a digital world. This is their life. The life is this. The life is not out there. I mean, you just go to a restaurant and look at people not even talking to each other. They've got the face in the phone. Kids have the face in the phone. So their life and their reality is actually here. So does this lead us down a good path or does it not? I really don't know the answer to that, but I'm a great believer in diversification. And the banker that introduced me to gold in the, actually it was only in 2003 actually, up until that time I'd not been involved with gold. It's the beginning of a bull market. He told me rulers of empires, royalty, and the financial elite have always put part of the paper wealth into gold. And that hasn't changed today. That's still the case. Who's buying gold today? The big central banks, not the Western central banks, but the big central banks of China, Turkey, Russia. And this is where we're having the economic growth. The economic markets of the West are flat. There's no growth there. And we're having the demise of the currencies because they're printing so much currency, correct? So a lot of the real wealth, tangible holdings is actually going to the East. And these countries, these emerging markets will have probably growth of 6, 7, 8%. And they understand gold. They have a long history, thousands of years history. So I'm a great believer in diversification. I believe it's great to have some ownership of gold and silver, some precious metals. And as my banker told me back then, it may only be 5%. Now, maybe it's 10% of your paper wealth, but it's good to own some. You're not putting all your assets into that. You're having some ownership of it as a protection. It's an insurance policy. Now, on the other side, of course, you'll also own some cryptocurrency such as Bitcoin, Ethereum, maybe some of these other particular coins. The history is very short, but the trend is very strong now with these currencies, isn't it? I mean, the purchasing power of the Bitcoin, to buy, let's say, as an example, to buy food items 6 months ago using a US dollar compared to a Bitcoin, let's say 6 months ago, compared to what you need to spend with US dollars today. You need a lot more US dollars to pay food items, different things today. But you're purchasing, comparison, paying with things in Bitcoin, your cost of your items are much, much less in one respect, correct? So there's a great advantage for people diversifying into ownership of these particular, these types of currencies as well, which I'm a believer in. But you've got to manage that as well. You've got to manage the risk, because none of us know what the outcome is going to be into the future. There's many, many moving factors that we don't have control over. Many of them is regulation. Okay, I don't believe it can never go away, the cryptocurrency, but certainly governments can make it very, very, very difficult. So it's about managing the risk, but the ownership of real hard assets is truly important, I think.
Yes, exactly. And you said the government certainly can do a lot there. Now, very recently, we see a lot of people who just really up on a few months ago were very much against also cryptocurrencies, and were even saying, well, it has no use, has no this, whatever. And all of a sudden, a lot of people, they change, they switch. Even big, very well-known people in the world. When I see things like that happening, and that's me, and again, this is not an investment advice whatsoever, it's just I see history in somewhat or not repeating. When I say that, I mean, history, and this is where so many people in that crypto world get it wrong. I mean, you and I, we were discussing the other day, we saw some people giving on a big platforms actually interviews, and where all those experts, whatnot, and they started speaking, well, when they got involved in crypto, they didn't really understand money. They didn't understand any monetary history. Now, they got involved like 2, 3 years ago, 4 years ago, now are big platform speakers, yet they make their introduction with they didn't understand money just 3 or 4 years ago. For me, that really raises a lot of concerns in order to, so you have no really understanding about money, about monetary policy, never understood gold. All of a sudden you become this expert in this very, very new asset class. I'm very, very cautious, so to speak, because again, as you mentioned, my background, I'm coming from communism, socialism, having lived under where governments can, of course, forbid anything they wish to forbid, and where they can, of course, put false media out as much as they wish to do, because they have the means and the tools for doing so, which, of course, we saw recently on the latest election in the United States. So there's a lot of things which make me concerned. And this is why I'm very much, while a lot of people find gold or silver not sexy, while I'm very much bullish on it, because again, it gives me that peace of mind, this tranquility, because it has been there for generations. It will be here. And of course, I always do the practical thing. And the practical thing for me is always going to places in, of course, different countries and testing, testing, meaning testing with the common people, testing with in the normal practice life. What would you rather have? A, paper currency, a digital currency, or gold? And funny thing enough, they always like gold. So why? Well, because they can feel it, they can see it, they can touch it, it's there. So this alone, those as long as this I see, well, we have something really, really great. But of course, besides the other values which it does present. Now, but why is it again so many people, they rather buy into something which has a lot of hype, or buy into something which is hyped a lot, or into something which gives them a instant return, a quick return, a quick money. Why is that human psychology, humans, why are we wired like this, that we want to always get this instant gratification?
Well, like you and me, we want to earn money. We're greedy. Historically, the answer is greed, correct? And especially in today's world, where there's so much spin out there, you don't know what's real and what's not real in the marketplace. In one sense, I mean, quite often in a lot of these things, even going back to the .com boom. I lived the .com boom in the 1990s up until 2000 or 2001, when the market crashed, the Nasdaq crash, and I was putting money into, let's say, the .com stocks at that particular time. I think Amazon at that time was under $1, maybe just a bit over. I didn't understand it, of course. I had no idea. But my broker was ringing me saying, Bill, here's the stock. It's a .com. What is it? He didn't really know. It's something that you couldn't see. It was just a website, correct? There was technology you were buying into. And of course, most of those failed. Now, when the market, I made a bit of money on some of them. But when the market corrected, I can tell you right now, most of them were wiped out. And it was only the few that were left standing that had real asset value behind them that are there today. Now, Amazon, of course, I don't know what the share price of Amazon is. I'm sure it's over $2,000 a share. I'm sure about that today. Whereas back then it was less than $1. Maybe it was $1.30 or something. Just imagine that. But we're going back to 1999, whatever. Pure answer is, why did I invest into those particular companies? One, because I was hungry to make money. Of course, that's the way we are. Our mindset works. We're a little bit greedy. We think it's quick. It's a quick dollar. It's a quick earn. And we don't contemplate the risk. But in a bull market, any fool can make money because the trend is up. If it's a bull market in a particular sector, as it was back then, the .com, or as we're in now, in one sense, you buy something here, you hold long enough, you're going to make money, like a real estate boom, etc. But when the markets do correct, that's when you can actually, if you've overstretched yourself or overexposed yourself in any particular investment, that's when, of course, you can really you get caught out. So it's a matter of just being aware of that and understanding what you're doing and what are the repercussions if you buy in and, of course, the market goes against you. What's your exit strategy? How much loss can you take? I think with an idea back then, the reason I didn't sell out and exit all my things is I didn't want to pay tax. I was greedy. Because I didn't pay tax, I actually held on to these stocks that I should have got rid of and made good money on. I would have made a lot of money on them, but I didn't because I didn't want to pay my tax. In the end, I lost it all anyway, because when the market corrected, it went pretty much back to zero, these particular stocks. So that's, these are lessons in life. And as I said, markets take a while to actually go up, but when they fall very, very fast, just like an avalanche. You're muted, Claudia.
Unmute. Okay, so you can still see my screen, I guess. I'm just going to make it bigger from current slide. Okay, so when you see, and you may want to look at this and explain it a little bit, of course, this chart, just $100 back in 2000 put into precious metals. This would have outperformed the S&P 500 by 92%. Now, this is, of course, in the course over the last 20 years. That's 2 decades of our life. But still, you got to think about yourself, your salary. If you would put part of your salary into savings, into a bank, would you actually, of course, this savings would have been increased just by leaving it in the bank. And I know, Bill, you make this really great example, which I just want to put up, and you maybe want to explain that here on the slideshow, because we always talk about that. And that is really why savers are penalized by negative interest rates. So why don't you explain a little bit about the interest rates and why, you should really do something else than just holding your money in a bank?
Well, it's about diversification again, Claudia. I mean, you're trading, you mentioned this earlier on, you trade your time for money, okay? So you paid your income, and you may put that income into a particular bank. And for the bank holding onto your money, they actually give you a rate of return. interest rate, correct, for using your money. They re-lend it out many, many, many times over, but they may give you historically 3, 4, 5, 6, 7%. I can go back to the early 1990s, where if you had money in the bank at that particular time, you were getting about 12, 13% return on your money. Just imagine being a retiree at that particular time. You worked your life and you were cashed up, you had money in the bank, and your term deposits, just a normal CD, was giving you a 12% return on your money. I mean, as being a retiree at that time was fantastic because you had cash flow. Even 100,000, 200,000, you're earning 12, 24, $30,000 a year income just from the interest return on your savings from your labor that you put aside. And of course, today that's not the case. If you're a retiree, you've been working hard, you've been saving hard for that retirement, you're actually penalised. You might have $200,000 sitting in the actual bank, but instead of the bank paying you for reward for your hard efforts of saving and for your discipline, they're actually penalising. You're actually paying them to have the money in their bank. The other
What about this example? What about this example I put down here on our slideshow? The $50 on a 5% return.
Well, this is really the same subject, isn't it? I mean, if as I said, if you had been retired in the early 1990s in Australia, you were getting a 12% return on your money. So just to give you an idea, just to earn an extra $50 per month income at 5% return, you'd have to have equity of $12,000 in the bank. And that's sort of $12,000 to give you an extra $50 a month. It's nothing, but you have $12,000 tied up. It means you have to have $12,000 locked up in asset value and cash value to give you that $50 per month. For $600, you have to have $150,000 just to give you $600 per month. It's incredible. So just imagine that. You have $150,000 in a bank locked up, and it's only going to give you $600 per month return. That's even 5% per year annual return. Okay, and of course for $10,000 a month, you need $2.5 million. Now 1%, of course, we're not even into negative interest rates. Just look at the difference of a 1%. To earn $50 per month residual income, you need to have $60,000 in the bank to give you the $50 per month. And of course, for $600 per month, on our platform, we teach people how to earn $600 per month extra very, very easily, and it's costing you less than a couple of dollars a day. But here you need $750,000. How many people out there have $750,000 to tie up, and would they tie it up for $600 per month? You just wouldn't do it, would you? So your currency is definitely working against you, and of all this monetary printing, trillions of dollars being printed, it's going to actually buy you less and less and less. Now this chart here, in fact, I heard on Max Kaiser, many of you would be familiar with Max Kaiser, Max Kaiser report. He talks about the US. He's a US citizen. He was a Wall Street guy, a very smart guy. We're often told by governments inflation is very low, 1.8, 1.9%. He said it's total BS, and it is total BS. He said the real inflation in America is probably over 10%. And at 10%, that would actually mean that, in less than 10 years, between now and 2030 primarily, your US dollar would buy 60% less than what it does today. It's incredible. So you think about that. Think about where you are today, what your savings are, what your income level is today, and think about that in 6 or 7 or 8 years, the money that you have today is going to buy less than half of what it does today. Everything's going to double in value in price. Now, if you're burdened with debt and you're on income earning, it's very, very difficult. How are you going to double your income? So the protection against this is a few things you can do. One is you own assets which generate another source of income for you, multiple streams of income. The other thing is you have gold, which has been a hedge against inflation for many, many years. And as I said before, it may only be 5% of your paper holding, but it's an insurance policy against the effects of inflation. The perfect example here, I've got 1 ounce coin of gold here, I think. Let me just have my wallet. And the example is very, very clear. You can go back in Roman times and, an ounce of gold, which is 31 grams, 31.103 grams of pure gold, could actually clothe a person, could buy a toga and a pair of leather sandals. 100 years ago in the 1920s, this 1 ounce of gold would actually buy you a fine 3-piece suit, shirt and tie, and leather shoes. And of course, today, actually 100 years ago, 1 ounce of gold, this ounce of gold was valued at $20 US. Actually, I've got a $20 note here too. I think it's like that. Francs, euros. It's just paper. Let me take out a $20 one. Here I have. Oh, it's euros. Sorry. It's $100. Anyway, it doesn't matter. The point is that this 20 euro note is going to buy less than half of what it will between now and 2030. And of course, in the 1920s, a $20 note would buy you 1 ounce of gold. In fact, we used to say in the currency back then that this $20 note could be redeemed for 1 ounce of gold. In fact, the $20 note was a promissory note to be exchanged for 1 ounce of gold. And for 1 ounce of gold, you could buy a 3-piece suit, shirt, tie, and leather shoes. And of course, today the question is, what can a $20 note buy you today? It might buy you a pair of socks, but it certainly will not give you a 3-piece suit, shirt, and tie, and leather shoes. But of course, the same ounce of gold today, anywhere in the world, exchanged to any currency, will still give you a fine 3-piece suit. I think what's gold today? It's around about $1,700-1,800 per ounce. So you'll be able to do it very well. I just saw that you're about to provide the example of the house. 1971, a house in the US will cost you $25,000. The medium standard house in the US costs $25,000. Today, the same medium standard home is $280,000. Now, back in 1971, you'd need 760 ounces of gold at $35 an ounce to buy you that medium-sized home at $25,000. Today, you only need, it's less than 200, I think it's 150 ounces of gold to buy you that same home, which would cost you $280,000. So, you know, the purchasing power of paper wealth, what I've got here, all this paper stuff, all these different currencies, is diminishing in time. But gold over time will preserve your wealth. And that's, again, it's only a very small part of your portfolio. So the question is, how do you get onto it? How do you actually store gold? Actually, I like the silver example too, Claudia. So I remember as a kid in Australia growing up, is that our coins contained silver up until 1966. But for the people in the US market or North America, they'll understand this very clearly. A US quarter, which is 25 cents, would buy you a gallon of gasoline. And a quarter back at that time contained 5.6 grams of silver. Now today, to buy a gallon of gasoline, I don't know, maybe it's a couple of dollars in the US, but the same 5.6 grams of silver will still buy you that gallon of gasoline. So you can see that over time, throughout history, precious metals have always been a store of value, whereas this paper stuff, it strips the wealth from you. In fact, it's designed to transfer wealth away from you back to the central banking system. So you've got to think outside the box. How do you actually protect yourself? And this is why we developed our program, Claudia, where anyone can get started on a gold and silver savings program for less than 25 euros per month, which is less than a couple of dollars a day. You can start, actually it's less than $1 a day. You can actually start turning paper into real tangible wealth very easily. And the important part is it's actually highly liquid as well. And, you know, like all insurance policies, maybe something happens in our life, and when things happen, it's normally unexpected, of course, you know. Maybe it's my car. I was in a taxi today and coming back from a bank meeting, and the taxi ran up the back of the car. Things unexpected happen, of course, you know. No one was hurt. So I had to get into another taxi. But you have actually insurance against accidents, don't you? We don't expect these things. And gold is like an insurance policy. And the important part is that the taxi driver, the company didn't have, or the other car didn't have insurance, you're at a loss, correct? So at times we need to be able to liquidate our policies and make them useful. This is what we do with gold and silver as well. And through our platform, you can actually you can turn your gold back to cash, back to your currency very, very easily on our system.
And you know, you make just a very great point there. It is very liquid. And I sometimes, and not argue, but I discuss, of course, with people about liquidation, because this is also one of the things which, especially right now, all those crypto guys talk about liquidation. It's easy to liquidate in and liquidate out. Well, I would argue against that. I mean, gold, again, like anywhere in the world, you can go to any precious metals dealer and you can sell gold and can get cash for that. You can do it even here in the Dubai Mall. I can just walk down here from the office. You know, the office is just in front of the Dubai Mall. I go down here, would take your ounce of gold. I could actually cash it in against dollar. In fact, I have already checked all this out. Very easy, very simple. Now, tell anybody to cash out cryptocurrencies if in need. tell anybody here, I mean, you have been traveling to different countries. Let's say you come back from Angola and you would take the Angolan kwanzi, or you came back from Kenya, you take the Kenyan currency. You're not even allowed to take it out. So, and they will also not buy it here from you. Yet gold is very liquid, while cryptocurrency not so liquid, even though I like it very much. But again, what we want to achieve, I believe the aim is here to get you educated, to get you enough understanding that this is about diversification. It's not about putting all your eggs in one basket, not just going blindfolded into one thing. Have really something which is a safe haven, because you always need that insurance policy. So this is what my opinion to it. I don't know, Bill, what you would say against or argue against it, because also what I miss a little bit is those arguments. So everybody's always running at one thing, and there's no really arguments again. There's not any more discussion. I like discussions. I like to be challenged as well.
Well, I'm not going to argue with you, Claudia. But with that said, primarily, again, it's a personal choice, but history speaks for itself. So we want to keep it very, very simple. This is not rocket science. The longer you hold on to this paper stuff, the less it buys, correct? I can't see it. There we go. The longer you hold on to paper stuff, the less it's going to buy. Okay, so what we need to do is to do a few things. Number one, understand how the monetary system is designed. And once you understand clearly that it's designed to transfer wealth away from you back to the central banking system through the effects of inflation, you realize, okay, building wealth, I need to have the currency, I need to have a liquidity to buy for my taxi fares and buy food and different things. But to build long-term wealth, you don't save in this stuff. You want to sow that into other assets. Now, gold and silver in itself is a long-term wealth protection. It may only be 5 or 10% of your asset holding. So you own a bit of that because it's solid, it's highly liquid, it's protection. It's a strong insurance policy that has thousands upon thousands of years of history of protection. And the third thing you want to do is have multiple streams of income. Very, very important. As this stuff keeps being demised, keeps buying less and less and less, we need to earn more, don't we? Now, you want to stop thinking about, I have my job. If I'm driving my Uber, I'm only earning while I'm driving my Uber. You want to start thinking, okay, how else can I earn another source of income while I'm driving my Uber and while I'm sleeping? Maybe I could have 2, 3, 4 other sorts of income coming in at the same time. That's how you build freedom, financial freedom, and that's where you don't have to depend upon this system that we're living under that's really designed to strip wealth away from you, and that's what we're seeing around the world right now. Now, liquidity when it comes to the crypto, I'm a great believer in the crypto. I love the decentralized concept of it. It's not owned by anyone. It's currency for the people. But I've been in countries where the internet's been shut down. And let's face it, when you need your insurance policy, you need that bit of gold to buy your air ticket to get out of a country or do this or do that. Maybe I can't get my crypto because there's no internet connection. And this has happened. So again, it's diversification. Maybe if in the US you think, oh, well, in the UK, this is never going to happen to us. Historically, you can go back to the US currency called the greenback. It actually collapsed. The US it was called the continental note, actually. So before this note that we have now, the US dollar we have now, the US used to have the Benjamin. They used to have another one called the continental. But they printed so much of it to fund one of the wars, might have been the Civil War actually, that it became worthless and no longer exists today. Now, what's going on with this particular currency, many experts will tell you it's heading down the same path. It's certainly losing buying value. And as I said, between now and 2030, less than that, it's going to buy less than half of what it will today, which means all of you, including us, we have to double our income. How are you going to do that? The great news is we have our platform at Utopian Global. We've got real assets at Utopian Global, and we have some fantastic assets coming out and a very nice app coming out probably in the next 6 weeks, which I'm sure you're going to speak a lot about as we get closer to that period. And these assets are solid. They're going to be callable. It means that you buy into these assets, you want to get your money back. We're going to give you money back. It's not a problem. How can you do that on the stock market? Depends on the price. So we're building something very, very strong now for the people. The core thing is it's real assets, not just gold and silver. It's going to be other assets as well. That's all I can say about it. But we're well and truly on the way with that, bringing that to the marketplace, Claudia.
I'm very much looking forward, and on this, I'm ending here this short, interview with you. Very exciting news, and so each week we're gonna trip a little bit into the market until, of course, we have our launch date, and I'm very, very excited for that because. We're going to bring something to the table, which, as you so often said, it is solid. It is very, very solid. And so I like solid things. I like solid assets. I like things which you can touch, which are there, which are real, which are not based on speculation, maybe, or hopes, which are giving a real return. So I'm excited about it. I hope you are too. So stay tuned on our further interviews, and we're going to, of course, bring other people as well on the call. And looking forward to see you on our next presentation. Now, how can you get involved into Utopian Global if you have not been involved yet, or have nobody who actually or basically heard about it? Well, go first of all back to the person who introduced you to Utopian Global, get their link so that you can join, get your questions answered, and so on. Now, if you don't really know how to get on board, you just found it because you came across the internet, just send an email to support@utopianglobal.com. And we have lots of Facebook groups, so we have lots of course, different pages there, and check it out, do your research, and hopefully you get started with us, with Utopian Global, to own real assets, to build real income so that you have a great lifestyle. With that, I say thank you, guys. Thank you all your comments. Bill, you did some great comments. Reggie, Julia, great to see you all. And I'll see you on future presentations. Thank you, Bill, again, joining us here Tuesday from Dubai.
Thank you, Claudia, and thanks everyone. Please stay safe and well. Bye-bye.